Hi and welcome to iGold Israel's YouTube channel. My name is Joshua Feldman. I'm the director of iGold. iGold has been Israel's trusted bullion dealer in physical gold and silver since 2012. Our company is located in Eilat in southern Israel. If you're looking to invest in physical gold and silver bullion products, our company, myself and Aryeh are the people to speak to. So call us on the number below or visit us on our website www.igold.co.il. Today we're going to be looking at the gold and silver ratio. This is a very important ratio for first-time investors because ultimately the first-time investor who purchases through iGold needs to make a decision. Do I buy 1 ounce of gold or can, for the same amount of dollars, purchase 90 ounces of silver? So today we're going to break down the gold and silver ratio into its components, and we start off with the gold and silver supply side. Here we're going to be talking about the mining quantities that are produced annually, and also what is the ratios of gold and silver that can be found in the Earth's crust, because that's very important to understand, which is how much gold is out there and also how much silver is out there, and compare these two values. So to start off, we're going to look at some statistics regarding the supply and demand of gold and silver, and you can make a decision. Hopefully you'll be very informed by the end of this video once you've seen all the data. So starting with the gold supply. As an overview of the gold supply, the amount of above ground gold that has been mined throughout history amounts to approximately 190,000 tons, 2/3 of which has been mined since 1950. 20% of the gold that's mined is made into investment forms such as coins, 50% is produced and used in jewelry, and the remaining 30% in various other forms. If all the gold were melted into a cube that exists in the whole world, it would be approximately 21 meters on each side. So as we look at this image of the total above ground stocks at the end of 2017 by the US Geological Survey, what's very interesting is figure number 5, because according to the US Geological Survey of 2018, the remaining amount of gold that can be mined in the future from the Earth's crust is only an additional 54,000 tons globally. So 54,000 tons is the final supply of gold left in the Earth's crust that's accessible to miners. So let's take a quick look at how much gold is mined each year so we can put these figures into perspective. So here we have a graph of the annual mine production from mining and also from recycling from 2010 to 2018. The amount of gold that is mined annually is about 3,500 tons, with additional 1,100 tons coming from recycling. Now we move to see which countries are producing all this gold. Looking at which countries are currently the largest producers of gold, we see that China leads with 12% of global production with 404 tons per year, followed by Australia, Russia and United States in order. If we have a quick look at the largest mining companies such as Newmont Gold Corp, which trades on the New York Stock Exchange, their all-in sustaining costs to mine an ounce of gold is about $850 an ounce. And there are some Chinese firms which are able to mine gold even cheaper at about $750 an ounce. So what do we learn from this? Gold is currently being priced at about 150% of its mining cost. Annually about 3,500 tons of gold is mined, while the total amount of mineable gold in the future totals about 54,000 tons. While mining since 2010 has risen from 2,700 tons to 3,500 tons, recycled gold has dropped from about 1,600 to 1,100 tons. So for silver, we're going to be looking at the amount of physical investment silver that's available. That's 0.999 fine silver, because it's difficult to get an accurate numbers for total silver supply because the majority of the silver is consumed in industry. What you may be surprised to find out that is less 999 fine silver bullion in existence today than there is 999 fine gold bullion. While gold occurs less frequently in the Earth's crust, we only use about 9% of annual gold supplies in industry, while we use about 60% of annual silver supplies. If we look at the total above ground silver bullion or fine silver that is available to investors each year, we see that there's only about 2,457 million ounces or 76,000 tons, compared to gold that is 190,000 available tons for investment. So from annual mining supply, 20% of silver available today is turned into an investment form such as coins and bars, 20% is used in jewelry, and 60% is used in industry. And the silver that's used in industry is consumed. Once it's consumed, it goes into all sorts of electronics, your cell phone, mirrors, solar panels, and it's not very likely that this type of silver can economically be recycled, so it's basically lost. If all the investment silver were melted into a cube, it would also be about a 20-meter cube on each side, very similar to gold. So the available silver for investment is about 1:4 to gold in terms of quantity that's available today. And for every 1 ounce of silver available, that means there's 4 ounces of gold that's available for investment. So here we're looking at silver's infographic, the total above ground stocks. And what's interesting is that we look again at figure number 5. The remaining silver that's mineable in the Earth's crust is 530,000 tons, which is 8 times greater than the remaining amount of gold that's available, that's mineable in the future from the Earth's crust. And here we are looking at the graph from the Silver Institute, and we can see that the amount of silver that's mined annually is about 26,600 tons compared to gold, which is only 3,500 tons. An additional 4,700 tons of silver comes from recycling. So if we look again for silver this time at the countries that are the largest producers of silver, we see that Mexico leads with 20%, 23% of global production with 6,100 tons per year, followed by Peru, China, and Russia. So looking at some of the largest mining companies such as Glencore, the average mining cost of silver for these large industrial international companies is about $10 an ounce. So silver is also being sold at a profit of about 150%. So very similar to gold. So what can we learn from this? Silver is currently being produced below mining cost, and like gold at a 50% profit. Annually about 26,600 tons of silver is mined. The total amount of future mineable silver from the Earth's crust is 530,000 tons. And while mining since 2010 has risen from 22,300 tons to 26,600 tons, recycled silver has dropped, very similar to gold, from 6,200 to 4,700 tons. Now we're going to glance over briefly gold demand and silver demand. Total demand for gold during 2018 was 4,300 tons, while demand was split 2,200 tons with jewelry, which is about 50%, about a quarter to investment, and just under a quarter to central banks. While silver, the demand for investment was 5,600 tons, of which 18% is from the total mining supply. In contrast, industrial demand was 55% of total silver supply, which amounts to 18,000 tons during 2018. So what conclusions can we draw from this information? Gold and silver used to be valued according to the price discovery mechanism. Gold and silver were mined and then minted into coins and bars, and then they were used in the market to purchase goods and services. Not only were the prices of the goods and services valued in the free market in terms of gold and silver, but also the quantity of gold and silver coins were valued against each other in circulation. Gold and silver had an average ratio of about 15:1. We also see that both gold and silver prices are above their mining cost, about 50% above their mining cost, so gold and silver have strong support on the downside. In today's market, gold and silver are priced in the paper markets, which has very little to do with the physical demand and supply of the metals. So while gold and silver ratios are a very important indicator, the fact that the pricing mechanism in today's world is based on paper futures market, it does not give a very good indication on whether one metal is cheaper against the other, because we cannot apply real world demand and supply to this fictitious paper market. So let's look at some of the paper gold and silver numbers. The LBMA in 2018 says that the daily traded paper market is about $37 billion for gold and $5.2 billion for silver. So in a single day, 900 tons of gold and 11,000 tons of silver is traded each day by the LBMA members. Remember that only 3,500 tons of gold is produced in an entire year, and only 27,000 tons of silver is mined in each year. So in a single day, we are trading close to 50% of the annual production of the entire planet on these paper markets to determine the price of gold. So how can we apply what we've learned from this video? We learn that gold and silver is priced according to the paper markets and has no relation to the true physical demand and supply. This means that the true price of gold and silver together should be much higher. The way that iGold would price gold and silver is looking at government debt across the world, which in 2019 has ballooned to record levels. If we use the United States as an example, you were to divide the amount of currency in circulation by the amount of annual gold mined per year, as it was done in 1913, the value of gold should be about $4,800 and silver should be about $600. This is the same methodology used in 1913 when the USA was on the gold standard and the world was either on the gold standard or on the Bretton Woods standard. And this ratio is 8:1. This is the same ratio, in fact, of available gold to available future silver that's available from mining. So I hope you enjoyed our video. I've tried to give a very broad and very basic understanding of the gold and silver demand and supply side and how that relates to the gold and silver ratio. Our conclusion in the end was that we believe not in pricing gold and silver in terms of demand and supply from mining, but more in terms of government debt, because governments in the future, as they rack up more and more debt and these interest payments become larger and larger and even exceed the tax revenues of the country, governments are going to be forced and pressured into returning to a gold standard. And in those terms, as we saw with the US debt clock, if gold and silver is revalued according to the amount of currency in circulation, as it was done in the past in 1913, we're looking at a significantly higher gold and silver price.